Well, better late than never, I suppose. Sorry to keep you waiting here this evening, guys and gals. It's about that time of day again. Time to get back to work. We got Fed Day. FOMC is right around the corner. It's Tuesday evening. It is September the 21st, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it is great to have you with me. My job tonight, very important job, is to help us find the best trades, setting up for not just any Wednesday, FOMC, Fed Day, coming in hot tomorrow morning in our trade room. Got some great trades on my radar for tomorrow's trading session. Got some ranges on the Eminis. Nice strong push higher on the gold. I can see some breakout pullbacks. I can see some reversals. I can see some failures and snaps back up to retest the high. Trust you me, by the end of this video, you'll know my favorite trade for tomorrow. And of course, I'll also give you guys some stuff to avoid to keep you guys out of trouble and in the green tomorrow, whether you're trading on your own or you're trading with me tomorrow in our trade room. Before we jump into the video tonight, though, as always, I just want to make sure to remind you, make sure you subscribe to this YouTube channel. I publish these videos every evening with my best trade ideas right here on this YouTube channel. Make sure you subscribe to our channel, hit that little bell icon so you always get notified every time I publish something new. If you have any questions for me, drop those questions in the comments section. I love to answer any questions that you might have along the way. And if you guys enjoy this video as much as I enjoy making it, do me a favor, hit that like button, that thumbs up here for me on this video. Really appreciate you guys carving out time and tuning in every evening on this video. But enough of the intro, though. Time is ticking. As you can see, I'm a little bit late to the party here tonight, so thank you so much for sticking around here and waiting for me. Where should we begin? Well, again, we got some big news tomorrow, so the window of opportunity is going to be a little bit smaller. We'll talk about that here in a moment. Got a bunch of, I'll tell you, there's a lot of great trades we have here for tomorrow. You'll notice there's some ranges on the S&P, ranges on the Nasdaq, and a range on the gold right now. We have a bear market on the S&P, which, even though we're very bearish, we're sitting at major areas of support. You could easily see a nice rip going higher here. I would love to grab a reversal going long on the S&P. And of course, with that big move down yesterday, this could easily keep going and take out those lows. So potentially either a reversal going higher or a breakdown, take out those 4,300 lows down there. I'm going to make sure you guys know how to buy that S&P and sell it here for tomorrow. I'll tell you, the Nasdaq is very similar to the S&P. The Nasdaq looks a lot more bullish than the S&P does right now. S&P has a lot of momentum for the bears right now. I'm going to go into a lot more detail as we dig deeper into this video tonight, but the Nasdaq's in a very similar position, although I will say you'll see in a moment here, the Nasdaq looks a lot more bullish. Again, we can trade reversal, right, going higher because we're right at some major areas of support with a range above us. And of course, right, like the S&P, we had that big move down yesterday, so it wouldn't surprise me at all if we keep breaking lower and take out some of these big lows at 14,820, 825 down there. So just like the Emini S&P, the Nasdaq also has some short side trades if we can get that breakout pushing through that pendulum swing. We'll talk about all those details here tonight. And how about that gold? Boy, gold has a strong run higher. What a beautiful spot right now to buy a breakout pullback on the gold. Got a lot of momentum there for the bulls. But of course, there's a range below us, and so there's always potential these ranges hold and we end up going lower. And so I've got some really nice short trades as well on gold if we can't get that long. And then don't forget, you got that pendulum swing, we can buy it right back up again. So like I said earlier, there is no shortage of really exciting trading opportunities tomorrow morning in our trade room, and of course for you guys trading your own out there, whichever market you choose to trade tomorrow morning. Speaking of tomorrow morning, though, let's grab a look at the schedule for tomorrow. We'll come back to those charts in just 2 seconds here, guys. We get some big news tomorrow, right? Get two news events you want to be aware of. One is that existing home sales number at 10 o'clock. And then, of course, the big one is tomorrow afternoon, that 2 p.m. FOMC announcement. Tomorrow's a Fed day. Tomorrow's FOMC day. And whenever I talk about a Fed day, the first thing I think of, or the FOMC day, is early in, early out. Our job tomorrow is to make our money before 11:30, 11:45, 12 o'clock, and then let all the inexperienced traders try to battle and bloody up their knuckles around that FOMC announcement. One thing I always tell my clients on an FOMC day is make your money early in the morning. Let the FOMC announcement come and go in the afternoon. Save your bullets, because what we get on Wednesday afternoon, we oftentimes get the best trades the following Thursday, right? We call this Reaction Thursday in our trade room. So my goal tomorrow, and of course, hopefully I'll see you there tomorrow morning in the trade room. Our goal tomorrow is going to be to make our money early. If I had to guess right now, I would guess probably some of the best movement we get will be after that 10 o'clock news. But, we'll take whatever the market gives us. We get a nice catalyst there at 10 o'clock Eastern time tomorrow. So, again, I want to get those trades off and make the money tomorrow before 11:30, 11:45 when things slow down for lunch. We get some big news there at 10 o'clock Eastern time, which we'll look for a reaction on that. And then my plan is always to sit on hands in the afternoon, because there'll be a lot of gambling. There'll be a lot of inexperienced traders doing things they wouldn't normally do. Not to mention there'll be a lot of kind of trickery, right? As the market whips around either before and after that FOMC announcement. You're more than welcome to try to gamble and hold on for the ride for the FOMC announcement, but be very, very careful, because remember, your stop is not going to protect you when the market moves against you in a big event like that. So be very, very careful, especially if you're trading right after the announcement tomorrow afternoon. I always kind of save my bullets, skip the afternoon, and then come back the following morning, because I'm telling you right now, you'll usually have plenty of really good trades that following morning that comes thereafter, right? I just don't want to bury myself in foolish losses late in the day on Wednesday and then have that hanging over my head as I go back into Thursday, right? The worst case scenario is you take 2 or 3 losses on a Wednesday afternoon because you're trying to gamble on the FOMC, and you knock yourself out of the game from getting the easy money on Thursday morning. All right, I know it's not kind of what you want to hear, but make your money early in the morning. That first half of the day on Wednesday, batten down the hatches. You're more than welcome to play around on a simulator or whatever you want, but just be very careful putting yourself in a very high risk position, because again, when it starts whipping around that FOMC announcement, your stops are not going to protect you. It's not liquid enough during that time. And don't forget, tomorrow morning, 8 o'clock Eastern time, we'll be in our trade room. I would love to have you there, right there with me. I'll put all the membership information and anything else we talk about in this video tonight, I'll put it down in the description of this YouTube video. I'll also put a big button for you guys to join up tomorrow morning right below me tonight on the website. So 10 o'clock is that home sales number. Get that money early tomorrow. And hopefully I'll see you in the trade room with us at 8 o'clock Eastern time. Back to our charts here. S&P's ready. Nasdaq's ready. Gold, of course, is always ready. I'm trying to make up for lost time tonight. Let's go relatively quickly here through these charts here for tonight. What's the biggest takeaway right now on the S&P? What do you think is the big takeaway? Well, we had that big blast higher, of course, right, from late yesterday into the early part of today. The bears, as you can see, quickly took control with a 1, 2, 3 reversal. Now, I want you to remember this part, because this is one of the key differences between the S&P and the Nasdaq, and why I say the S&P is, well, it feels a lot more bearish right now than the NQ. We'll grab a look at the Nasdaq chart here in a few moments. The strength of that move, right? The strength of that move going lower, I call these open loop moves. They're basically magnets as we go lower. The strength of that move is what really gives those bears the control of this momentum. They basically make a strong run lower into a trading range. That's basically what's going on. That range, of course, is a magnet. And the market will rotate back and forth from top to bottom of that trading range. Whenever I have a range, my job is to use the range as a magnet, find levels of support below to buy below, find levels of resistance above to sell above, right? Use the range as a magnet, and then look for breakouts, right? Look for bull breakouts, look for bear breakouts, right? It's a pretty simple idea when you have that trading range. So you know that with the range acting as a magnet overhead, as this market now goes lower, I can look for buy setups, right? We're at the pendulum swing. The amount we went above the range is now equal to the amount below the range. You know, think of a range like a balanced market, right? Think of like a pendulum swing. Right in the middle of that range, we swing up and we swing back down. So we're sitting at major support at those lows. We have a little more down here you can see, right? There's a little more you can see, probably some support levels at the low of that channel. Can I buy down here? I definitely can buy this thing. I just got to be careful because of what? Momentum. Momentum's very bearish right now. All that momentum turning off that high. How would I buy this market as it goes lower or as it goes higher here? It's a pretty simple idea. I have to rope in these bears, right? I got to get the bears to commit so I can use their stop losses as fuel, right? As gasoline to go higher here. I'm not really a big fan of trying to pick the bottom in a bear market. What I'll do is I'll wait for the bears to try twice, and then once they try twice on this pullback, now I know where their stops are, and I can use those stop losses as fuel. We call these two-try failures, right? It's basically a failure pattern, but because we're going against the overall momentum, I like to use the two-try rule. One try, two try. Now, something to keep in mind here too, which is, kind of cool about ranges. Again, it's all about rotation. So if we go lower and then we pop back higher, there becomes a big bullseye right on the other side of that pendulum swing, as we call it. If that happens now and we can get that strong run higher, this is where we look for that follow-up trade, which is usually going to be a trap. This is my favorite trades. I love this trade setup as we rotate back in the opposite direction, right? Does that make sense? Right? Again, you're buying off the low of that range by using a failure pattern. And because you're going against momentum, it's a two-try failure. And then, of course, you're going to draw that new channel and find that buy off the low. Usually the best entry off that low is what we call a trap entry, right? These are all price action entries. We don't use many indicators besides this moving average, right? All we use is price action because price action is the only indicator that never lags, right? You're not going to get false signals from price action. So these are some ideas I have for buying this thing, right? As it goes higher here. Now, could we end up all the way back up and then sell back down again? Absolutely we could, right? Look where we are right now, trying to buy off the low. So if we were to get that 1-2 end up around these highs, remember at this point now, lots of bullish momentum at this point, right? We're swinging back and forth, pendulum swing down, pendulum swing back up, find levels of resistance, and then same thing, literally same thing, right? Wait for the buyers, try once, try twice. Again, I want to let them try twice up here because of all of that momentum coming off of that low. Once they do, I know where stops are, and I can simply trade the rotation again, the failure into that pullback, right? And again, a lot of times that pullback entry is a trap entry off of that high, right? So failure into pullback. At the same time, keep in mind too, if we were to get that failure 1-2 and then really blast, right? If it really, really rips higher now the gig is up, right? Now it's really pushing higher. I can mark up that high. I can mark up that low. One of my favorite trades now is to get underneath the moving average, get those bears, take the bait, and then simply use those stop losses to buy right into those stops. Where's a target? Your target's definitely back to retest those major highs. And of course, you got that 08.25. That's the weekend gaps, closing price from last Friday. So as we go higher, those are some easy trades on my radar for tomorrow. As we go lower here, how do we sell it? As we go lower here, if the market makes a run lower, what's some options here? There's a couple ways to do this. One would be to look for just simply a 1-2-3 breakout pattern. Okay, got to hold that pullback and jump off the moving average. If we can get that 1-2-3 breakout, then just find your channel, mark that low, And then what I'll do is I'll drill down to a faster time frame, and I'll find one of my 4 favorite price action setups off the high of that channel. Now, we've talked a little bit about these already. The 2 most common coming off those highs are traps and failures. What'll happen a lot of times is as the market rolls lower like that, you'll be able to find that channel, mark up that prior swing. This will almost always come above that moving average. It's a trap, it's a failure, it's a pullback combination. Now, I'm not going to go over all the small details of the actual price action setups, but I do cover all the small stuff, all the entry techniques in our quick start class. If you haven't done so already, you got to grab that quick start class. In that quick start class, I'm going to teach you the same 3-step strategy that we use every day in our trade room to find the 3 to 5 best trades every day on our favorite futures markets. I talk about how to find the right levels of support and resistance, how to trigger the entries with price action setups, and you'll see hundreds of examples of how we apply those setups to markets like the S&P, the Nasdaq, and of course the gold in our trade room. So as the market rolls lower, that's what I'm looking for there. Again, grab that little pop-up there in the upper right-hand corner to get a much deeper dive into these specific entry techniques that I'm talking about here. We may also see it just grind lower. There's no reason why it couldn't just grind lower, right? If this thing starts to really grind going lower now your job is to find traps. Draw that channel relatively tight. Draw that channel relatively tight and look for that trap, right? If it starts to grind lower. See, sometimes it just kind of melts down because we had this big move down, right, from yesterday. Now, be careful, right? Be careful because once we end up down around these lows, we could easily see this thing start to roll lower, grind lower. We're getting that, right? We're getting that trap entry as we go. We take out that big low down there. And then remember, there's a big range right in the middle here. So would it be totally surprising if the bears came out and said, all right, we'll try once, we'll try twice, right? 1 try, 2 try. Why do we wait for 2 tries? Because we want to rope in those bears. We have all this momentum down here. We're at an area of support. Once those bears try twice, though, now we know where stops are. Nice, strong signal candle signals the entry. And I can now look for that pop back up. I can find that new channel, and I can trade this thing, as we see in the trade room, right? Trade the turn, right? Trade that turn. There's no reason why we can't sell short on the way down and then wait for those bears to dig their own grave, right, into that big low at at 4,300, buy into those stop losses with a failure setup. Basically a big 2-try failure, right? It'll be a relatively big pattern. We'll talk about that tomorrow morning in our trade room. And then, of course, that long coming off that new channel. Where the target be at that point? Yeah, target would definitely be back up into that trading range. So keep your eyes open on, and again, great spot to be a buyer right now. We'll see if these bears can give us a good signal. As always, right? Again, tomorrow, FOMC tomorrow. So be on the lookout for that time, right? Time is not your friend tomorrow morning. Get those trades early. Let's keep going. About some Nasdaq here tonight. Nasdaq. Now, let's see if we can figure out why the Nasdaq. Because the Nasdaq, at first glance, the Nasdaq looks pretty darn similar to the S&P, right? It is. It's almost identical. But there's one big problem. Remember how the S&P had that big 1-2 blast going lower? See, look. Go back here. Look at the S&P. Look at how much space the S&P bears get away from that moving average, right? That firmly gives the bears control of this market, right? Look at how little the buyers are getting done above the moving average. When it comes to day trading, short-term momentum is so important. It's so important, right? Because it helps you get better entries. It allows you to use smaller stops. So you really want to understand how to use short-term momentum. The long-term trend, nobody cares about that as a day trader, right? We're not long-term. We're short-term traders. So when I see the bears really jump off that moving average, I know this is a bear market, right? It's a bear momentum market. Look back at the Nasdaq right now. See what's happening? It's almost equal. You know what I mean? It's almost equal. The amount we go below the moving average, now the buyers got that. Yeah, I'll definitely give it to them. This is a relatively strong move, but so is that. right? This is a pretty, but so is that, right? So you can see why I say the S&P looks a whole lot more bearish right now than the Nasdaq does. Now, this may just be a small technical difference, right? But it does make me think, though, this could be, instead of a bear market, this could be a bull market basically into a flag, right? Or, spiking, not a spiking channel, but what we call them, pennants, right? Flag patterns, things like that. In other words, the buyers feel like they still have their hooks in this thing. Now, you know me. I don't care what direction I trade in. I just want to make sure I'm going where the odds are in my favor. And right now, the buy side definitely looks to be where the easier money is going to be. We're still pretty bearish, right? Let's not forget that, right? We're still looking pretty bearish here. We're still rotating off the high of that range. We've got the range right smack in the middle. Remember, whenever we have a range, what do? We find levels of support below the range, and we buy back in. Yep, we find levels of resistance above the range, right? And we sell back down in. So right now, at a great spot to get long. This could definitely go a little bit lower because of that pendulum swing coming down. So don't be surprised if it tries to go one more leg lower. And really, it's very similar here to the S&P. I'd love to buy this area, but the momentum right now is a little too strong for the bears. Again, not as strong as the S&P, but it's still a pretty bear market overall right now. They're making lower lows and lower highs pretty much all day today. So to buy this market, this is definitely where that 1, that 2 comes in. And again, keep in mind, this is a 6,000 tick chart, right? I'm not gonna trade this at a 6,000 tick chart. We'll drill down to a faster time frame. I cover all the time frames, all the indicators, all that stuff's covered, right, in that quick start class linked up top. Once those bears try twice here now, right? Once they try twice, all their stops are sitting. And then again, one of my favorite trades is when the market pops back up. Moving average comes over, shallow pullback goes higher. We can now mark up that new channel, right? Remember, draw the channel backwards off the highs. We talk about that quite a bit in that quick start class. And then, of course, you've got your trap entry there, or your buy off that low, that 2 try failure, right, into that first pullback off the low of that channel. Love those 2 trade setups. And then there's always a chance, right? There's always a chance here we may just rip and run higher. If it just simply rips and run higher, and this, of course, could also apply to the S&P as well. If it rips and runs higher, right, look for those traps as we go. When you have this much momentum coming off of that low, if it really, really races higher up there, look for that shallow pullback, that higher high in price, and that trap off that low. Where would that target be, by the way? Yeah, back up to retest these major highs. You could easily see this happening here in the overnight, right? Kind of getting the party going higher. The big variable on this, the big question mark is going to be, do we really push on strength? Do we get that shallow pullback, that higher high? That's what confirms that trade. The strong move up sets the tone. The shallow pullback drives the buyers crazy. The higher high in price confirms another leg going higher, and that trap is just easy money as we're going higher here. Now, be aware of that variation to it. If we do find ourselves, let's say, for example, we get that 1, that 2, we end up back around these highs, but now instead of it simply, right, running up, shallow pullback going higher, now we take off to the upside. The buyers now struggle, right? They come in, they try once, they're not getting anywhere now. They try twice. Remember, very, very bullish as you rotate. Remember, the range below you is the magnet. Wait for those buyers to dig their own grave, let them try twice, and then we can short going back down in. And same idea, right? Find that new channel, get that short off the high of that channel. These are oftentimes traps. These are oftentimes buyer failures. And again, the amount we went above the range is the amount we'll go below the range, and that will be the objective on the other side, right? So lots of ways to buy this thing as it's going higher. There's also some easy ways to sell off that high. It all depends on what we get. Now, if we do take off the downside, We got a big juicy target down there at that 14,823, 14,820 area. The only problem is right now we have a range overhead. So I definitely can't sell this first pullback, right? But I can definitely look for a 1, 2, 3 breakout pattern, 1, 2, 3 breakout. And if I can get that 1, 2, 3 break, remember, didn't do it there. Will they do it there? Maybe they will. I don't know. We'll like just like you, I'm waiting to see what we get as well. If we do see it 1, 2, 3 breakout, now the momentum is very bearish at that point. This range magnet, for whatever reason now, has been forgotten. And now the big objective is to get back to that 14,820 area. What do? We mark up that low, we mark up that high, we drill down to our faster time frames, and we find our entry signals. These are oftentimes, again, they go above the moving average, right? They're oftentimes going to be buyer failures, right? Bull traps into pullback combinations. I'm not going to go over all those smaller details here tonight, but if you grab that quick start class, you'll learn those pattern variations and how we trigger the entries in our trade room. That's definitely going to be an easy short there as we go lower. If we grind, right? Don't forget, if the market was to kind of push lower and really start to run here, one of my favorite trades is that strong move down, that shallow pullback, in this case lower low, and that trap off the high. Remember, I love channels when the market's trending. So don't be afraid to go looking for some channels, right, and grab some channels there. I'll make sure to help you guys find the right channel tomorrow morning in our trade room. It has a lot to do with what the moving average looks like at that time. And again, if you grab the quick start class, you know what I'm talking about, right? The moving average is a very, very important part of not only finding the right channel, but also trapping in this case, the bulls on the wrong side of that market. We'll talk more about that stuff in that free video class that I mentioned earlier. The bears definitely want to retest that low, right? It's exactly where these bears want to get to. Will it be a 1, 2, 3 breakdown and then mark up that low, mark up that high and short that high? Or will this thing just kind of fall apart here and we're going after traps, right? After traps there on the way back down to those lows. And then once we take out those lows, right? Remember, at this point now it's very bearish, but we're now sitting in a major area of support now. Could we possibly, right, get that 1, 2, 3, take out those lows, run right into that support area, and then we wait for those bears to try once, try twice, find those stops, right, and rip it back higher, right? Think about that 2-try failure. And again, what you want to remember is the stronger the move down, the larger this 2-try reversal needs to be. Okay, so if this thing just pukes and runs lower, I'm not looking for a reversal, which is like 1, 2 like that, right? If it really pukes and runs lower, what I'll do, and I mentioned this last night, this could easily go 1, 2, 3, run lower. We find that, right, that channel, we get that short. If they really punch this thing into those lows, you can almost always get a follow-up trade, a bounce, a failure, and back down again. It really all depends on how the market looks as it goes into that range, as it goes into that low. But there's no reason why we couldn't look for that short off the original channel. If it really punches into that low, just simply wait for that bounce, trap in those buyers, right, above the moving average, and hit them again. Remember, if you have enough momentum in one direction, it's almost a guarantee you get a second leg or a retest of that low. Then we can start looking for those bears once, bears twice, and let her rip going higher, right? 2-try failure into that new hidden channel, pullback going up. Love these reversals, right? 2-try failure off the low. We're marking those stops up. We're buying at those stops, right? Off the level support. And then we find that new channel and let her rip going higher. We see a lot of those combination entries in our trade room. So now I get some good ideas, right, for kind of how I've been looking to buy off the low or sell as we go down in. And, I know I'm moving pretty quickly here tonight, a little bit late in this video here. Not to worry, though. I have a lot more details covered on this strategy inside of that quick start class. So we talked about the long side. We talked about the short side. This will also apply to the S&P as well. Just make sure, remember, stay out of the middle, right? If we sit in that middle and sit in that middle, again, this will also apply to the S&P tomorrow. If we get stuck chopping around right in that middle right now, what's the plan at that point? The plan is the longer we stay inside that range, the more likely we are to go down, get those bears to try and fail, and back up into that range, right? We go up into resistance, get those buyers to come in now, try and fail, and we can sell it back down in. All we're doing is, in a range market, is waiting for the market to pop up, waiting for those buyers to come in, get long, and simply use those stop losses along with the range, which is a magnet, to sell it back down again. Pretty easy strategy. Buy low, sell high, focus on failures. And again, right now, great spot to get long the Nasdaq. We'll see if we get the setup. And don't forget, tomorrow, FOMC day, right? So early in, early out on all these markets. Now, if there's one market tomorrow that you got to be careful with on an FOMC day, this is it, guys, the gold market. Now, gold's got a great setup right now. It's got a nice, strong bull trend, get a little range, pullback spot right here. So it's a great spot to get long for a breakout pullback on this trading range. Be careful, though, tomorrow. Tomorrow's FOMC day, which means they're talking about monetary policy, and you can't talk about the Fed without talking about gold, right? Gold has a tendency to be really nasty, really grindy, really whippy for most of the morning on an FOMC or a Fed day. So just be careful, right? Now, hopefully I'm wrong. I've been wrong before about that, but hopefully I'm wrong tomorrow. Usually it's pretty nasty on that Fed day for gold. So just be careful on this. What's the most important factor right now? I think the most important factor is, as I mentioned earlier, we have a very strong bull run. They took a pit stop right in with that range. And so it's basically just a bull market into a trading range, a breakout of that range. And this is very common, where they'll use kind of the top of that range for a pullback area. This is very, very common, right? It's very, very common. Now, with that potential pullback, you'll notice earlier I marked up one leg, two leg, and I have a pretty good idea of where this market wants to go. They want to retest the high, and of course take out that measured move as they go higher here. So I'd love to be a buyer on this. I also can easily see some ways to sell this market because, as you can see, I've marked up the pendulum swing. Remember, when it comes to ranges love to rotate back and forth. So there's no reason why we couldn't look for shorts on the way down and then buy it right back up again. Like I mentioned before on the S&P and the Nasdaq, trade that rotation. All right, so how do we trade it? How do we buy it? How do we sell it? My kind of favorite trade right now would be trapping in these bears off the moving average and pushing it higher here. Give me a lot of momentum right now for the bulls. Anytime we see this much momentum, we know there's a big bullseye right back at that high right now. The only problem we have to deal with is this range, right? Because that range, of course, is a magnet. So I wanna be a buyer if I can get the sellers to take the bait, basically, right? I'm hoping that the bears will come in and try to get short right into this area, so I can then use their stops as fuel. Now, there's one very, very big clue on this, and that is how the market reacted to the moving average. I told you guys before, the moving average it's not the secret, but it isn't the secret to finding good trades, but how the market reacts to the EMA, it really tells you what type of setup to look for. So see how they're kind of jumping off that moving average right there? It's not huge, it's not dramatic, but most of the time when they really try to jump off that moving average now, you have to think there'll be bears waiting right above that high. And so that's kind of the ultimate thing I want right now. I want to trap in those trappers. In my trade room, we have a setup we call Trap the Trappers. And that's exactly what I want to do. I would expect there to be some bears waiting above that high. I'm going to let them get short on this All their stops now are sitting right above that high. Again, momentum is very, very bullish. And I do agree, the Bears, right? The Bears may have something here, but the odds right now are better for a retest of that high. So we see this market pulling back, right? Kind of jumping, not as much as the S&P did, but jumping off the moving average. I now know there'll likely be a lot of bears waiting right above that high. Once those bears commit on their shorts, now we know exactly where stops are, and we can buy right into those stop losses. The easiest money you're ever going to make as a day trader is when you can catch traders on the wrong side of momentum, like this one right here, right? All that bull momentum right there, catching, as I said, trap in the trappers, right? Get those bears to trap them in and then simply wait for them to fail and buy right into their stop losses. And then we may easily see tomorrow we may see it really rip and run higher from there, right? We get that, trap the trappers. It's basically a failure setup. And then we look for that new channel, drill down to a faster time frame and grab the entry off that channel. Okay, remember, what you have to get, though, is you want to see a real strong pop, all right? If all it does is go back up and double top up here, right, and then pull back, I'm not going to buy that next pullback, all right? We're going to look for and see if it pops, right? Does it really pop? Does it really push higher here, so to speak, right? Really pop up? If I can get this thing to make that run, mark up that new channel, right? Find that little trap or a failure or anything really to get me in off that low, right? Trap the trappers and then grab that first pullback as long as it pops right through the high of day. And then, of course, we get that measured move up there at that 88.6. Okay, get some great trades are going long. Now, what if we did this? What if the trappers get trapped? Okay, what if the bears get trapped? We then jump up, right? We make our money on the way up to the high, but now we kind of sit there for a while, right? Now what do? Now we look for a 2-try reversal off the high. Okay, remember, the stronger the move, the bigger the 2 tries need to be. It's not going to be a little 1-2 back down again. It'll be a 1, it'll be a 2, and at that point now, draw that trend line off that high. Stops are sitting right below that low and hit them as the market rolls lower. Nice, big, juicy sell signal there. Those buyers are going to get the heck out of their positions, and it will oftentimes really dump as it pushes lower. Once that happens, now you got them. Now momentum's coming next. Now rotation and where the market wants to go next, right? So now take out your new channel, mark it off that low, drill down to your faster time frame, and again, this could be a bull trap. It could be a buyer failure. It could be a pullback setup. We'll talk about those, specific entry techniques in that quick start class I mentioned earlier, but that's the general idea, right? It's a 2-try failure off the high into that 1, 2, 3 reversal, 1, 2, 3 reversal into that first pullback test to short off of that high. Then we get down to those lows, and what do? We get a range above us, right? Range above us. There's a big area of support right there. All right, so how do we sell it as we go lower? Or how do we buy it once we're down there? You can probably kind of already see how this is going to come together, right? So let's say, for example, the bears do come in and they trap this move going lower. Yeah, this is exactly where, my favorite trade on these rotation trades is to mark up that low, mark up that high, and grab that trap, right? These are usually pretty easy trades to find. They're pretty darn reliable. The key is, of course, the bears came in, right? They take it lower, and I just can't sell that right now because we're just too bullish overall here. But if they are able to take this thing lower now to simply find that channel, especially if it really punches lower, that trap is money, baby, right? It's a great, great trade because they're trying to go. They're trying to complete that rotation. At the very least, they're trying to get back down to these, 1668 area. All right? So maybe we don't get a chance to sell off the high. Maybe all we get is that shot off that channel. And then let's assume we do end up back at those lows. Then what do? Use the 2-try reversal, right? Remember, we're very bearish at this point. Right? I want to buy because the range overhead is a great magnet. I'm at an area of support down here. Great place to be a buyer. But remember, momentum is a problem. You got to respect that short-term momentum. It'll make it so much easier to stay in good trades without getting stopped out. So in this situation, it can't get too aggressive down here, right? Let the bears try once, let them try twice. Once those bears try twice, all their stops are sitting right here. We're at major support, range above us. Grab that failure, right? Grab that failure. Sometimes we see some trend lines to get off of, right? Sometimes a hidden channel to get in off of, right? A lot of variations of that two-try failure. You'll see a lot of examples of that in that quick start class I keep talking about. And so that'll be your two-try failure, two-try reversal off that low. And then, of course, grab that high, grab that low, drill down to your faster time frame. And what I always tell my clients is that you may not have, not the guts, but you may not have the confidence to buy off that low. But when it does turn, that buy right there, that is your job to find a way in off that first pullback. You know, LeBron James, his job is to hit baskets, right? If you were a professional, football player, Tom Brady, right? His job is to throw receptions. Your job as a trader, if you don't grab that reversal to low, your job, right, is to grab that first pullback. That is your job. Whatever entry pattern it is, whether it's a bear trap or a seller failure or even a pullback setup, right? You want to grab that as the market rotates back and forth. All right, guys? And then the only other kind of variable here for tomorrow would be if we kind of chop around going sideways here. If we sit and go sideways, the plan really doesn't change that much. If we sit and go sideways, which would not be surprised because tomorrow, of course, is Fed day. If we go sideways there for a while, what'll probably happen is there'll probably be a channel coming down here somewhere. And so at that point, again, you'll want to go up. Let those bears try a few times, right? Buy it from there, or, right, pop back up, buyers once, buyers twice, back down to that trading range, or that strong breakdown, that trap, right, off that channel high. We'll know more once we get to tomorrow, but that will kind of give you something to think about tomorrow morning as we get ready for FOMC. All right, guys? Don't forget, tomorrow morning, 8 o'clock Eastern time. I'm going to see you there with me, right? We always have a great day in our trade room. Every day is always pretty good in our trade room, so I'd love to have you there, right there with me. Don't forget, I'll put all the membership details you guys need in the description of this video. I'll put a big button for you guys on the website, right below me tonight on our website. Don't be afraid to call the office. I know I moved pretty quickly here tonight, try to get a lot of stuff in this video. I apologize for keeping you guys late so far here tonight. But if you have any questions, don't forget, drop those questions in the comment section. And of course, you can always call the office here. I'm always here to help out every step of the process. Guys, that's it for me tonight. As always, thank you so much for tuning in. I'll see you tomorrow, 8 o'clock Eastern time. If not, be careful tomorrow afternoon on FOMC. And you better come back and see me tomorrow night. We'll go back and do it again, getting ready for Thursday's trading session. That's it for me, guys. My name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.